Hello.
Start. We will just start.
Yeah.
আপনি কত করেছিলেন পেমেন্ট? কোর্স শুরু হবে সেপ্টেম্বরের 2 তারিখ। We have joined for a question of profession. We have amongst us faculty, CME, internal who have got a wide field of experience in this professional business and professional area. So we will just take up the webinar. Over to you. You can just start. Sir, you can start.
Thank you, Japsha. Good afternoon, everyone. So it's my privilege to take today's webinar on profits and gains of from business or profession. Friends, in this 2 hours of the lecture, I'm going to discuss about the important provisions with respect to the profits and gains from business or profession. And we will, what I will do, the question and answers we will reserve for the last 15 to 20 minutes. I will reserve for the Q&A. So meanwhile, if at all you come across any question and answers, kindly give the questions in the chat box whenever it is, whenever the time permits, or else or else at the end of the lecture, I'm going to discuss with you all. So friends, let me share my screen. Team, can you confirm my screen is visible?
Yes, sir, it is visible.
It's visible, right? Thank you.
Okay.
Right. The first, welcome everyone to the webinar on the PGBP. In this PGBP, profits and gains from business or profession, we are going to discuss about the main important points. It starts with the section 28, which speaks about a charging section. It means what are the incomes are taxable under the profits and gains from business or profession, which speaks about. So generally, the incomes are related to business and from the profession. The incomes will be considered under the head profit and gain from the business or profession. The main one important point here we have to understand that in case of a partnership firm, any remuneration or any interest, any commission which is taken by a partner of a firm which is taxable under the head PGBP. The important point, one more point here we have to understand here. Any non-compete fee which is any non-compete fee which is received by a person for not carrying out of the activity, which is also form part of the this head. So the charging section which speaks about the types of the incomes which are taxable under the head PGBP. The next one, section 29. Section 28, which talks about a charging section. Section 29, which talks about how to compute the profits and gains from business or a profession. Section 29 tells that in order to compute the income under the head PGBP, we have to follow the sections, section number 32, section 43D. We have to see all these sections, each section, what the section says, what the section defines, what the section gives the provision, all these things we have to keep into mind, and based on that we have to compute the income, I will say gains here. Now we will understand about the section. So we will understand one by one section, the important sections wherever it is necessary. More important, I will stress more on that. The regular sections which are there, those things I slightly touch and I will proceed. Now here, as I said that in order to compute the profit and gain from business or profession, we have to adopt, we have to follow the section 32, section 43D. Now, what is section 30 which speaks? Section 30 speaks about rent, rates, rebates, insurance and taxes belongs to or pertaining to building. It means whatever the rent, whatever the taxes, whatever rates, whatever the rebates, whatever the insurance, whatever the things we incur with respect to the building, which all form part of the section 30. Again, so here building in the sense here I'm talking about only rent, rates, rebates, insurance and taxes only. I'm not talking about any capex. I'm talking purely here related to revenue expenses, revenue nature of the expenses I'm talking. Again, for the building, we are eligible to claim the depreciation. Okay, the depreciation or the depreciation with respect to the building, we can say that in case of depreciation for a residential building, we can say that this is a rate of the tax is a 5%. In case of a commercial building, this is a 10%. In case of a temporary structure, the highest rate of a depreciation is eligible 40%. Earlier, the temporary structures, the depreciation was earlier it was a 100%, but later on, based on the amendment, they made into the temporary structure, the rate of depreciation, maximum rate of depreciation is 40% only. For your kind information, my dear friends, the highest rate in depreciation as of now is 40% as per the IT Act, right? Coming to the next one, section 31, which talks about insurance and repairs with respect to the plant and machinery. With respect to plant and machinery. Insurance and repairs, it also is which talks about the section talks about insurance and repairs with respect to the plant and machinery. Any repairs or else maintenance expenses which are related to the plant and machinery which fall under the section 31, which is eligible to claim as expenses. The next one I would like to touch upon the section 32, which talks about a depreciation. Depreciation is one of the most important area or most important aspect in income tax. Whether you have a business profits or a losses, claiming of a depreciation is a mandatory. You cannot ignore, without claiming the depreciation, you cannot derive profits. So once you have a fixed assets, the fixed assets either may be a plant and machinery or a building, furniture and fixtures, computers, whatever it is, claiming of a depreciation is a mandatory at a respective rate. In order to claim the depreciation, we have to fulfill twin conditions. Then the two conditions must be fulfilled. The first condition is to claim the depreciation. The first condition is you must be the owner of the fixed asset. You must be owner of the asset. Okay. Second one, the asset must be used for a business or a profession purpose. The asset must be used for a business or a profession purpose. Please understand, the law has given a choice of saying that even you use the asset is for a passive use. There are the two types of usages there. One is the active usage and second one is a passive usage. I'm repeating. In order to claim the depreciation, we have to fulfill the two conditions. The first condition is you must be a owner of the asset. The entity must be a owner of the asset. The second condition is the assets must be used in the relevant previous year. Okay, used in the sense either it may be a active usage or else a passive usage. What is the meaning of active usage? Day to day in the course of business, regularly we use the asset, that is called as a active usage for manufacture of a goods or an article or a production. What is the meaning of a passive usage? The passive usage which talks about the asset is ready to use. The asset is ready to use, but whenever the need arises, we are going to use that asset. The best example for this passive usage is fire extinguishers in an organization. What we do, the fire extinguisher, we put on the wall. Like if you go to any organization or else any office or any MNC, the fire extinguisher will be displayed or else it is attached to a wall. Whenever there is a fire occurs, at the time only the fire extinguisher will be used. Let's say during the previous year there is no fire, the asset never used. Mere non-using of this asset, you are not denied for you are not denied for claiming of depreciation. Even that asset is not used but ready to use. Whenever the need arises, you are eligible to claim the depreciation. That is called as a passive usage. Right. So there are the things like with respect to the depreciation. As I said, for a building, the residential building, it is a 5%. For a commercial building, it is a 10%. For a temporary structures, it is a 40%. The rate of depreciation. If you if we discuss about the depreciation rates with respect to the furniture and fittings, the rate of depreciation is a 10%. With respect to a plant and machinery, with respect to plant and machinery, generally the rate of depreciation is, with respect to the plant and machinery, what is the rate of depreciation, sir? You can give the answers in the chat box. Let's have an interactive meeting. Sir, you can give the answers in the chat box. The rate of depreciation for a plant and machinery. The rate of depreciation for a plant and machinery, generally it is a 15%. With respect to, I can tell you, the plant and machinery with respect to the motor vehicles used in business of running them on hire. The rate of depreciation for a motor vehicle which is used in a business of running them on a hire, it is a 30%. And other motor vehicles it is a 15%. With respect to the ships, the rate of depreciation is a 20%, and the aircraft it is a 40%. The computer and laptops, which is a 40%, and books it is also 40%. The rate of depreciation for a books also is a 40%. And for any pollution control equipment, it is the highest rate. As I said, that the highest rate of depreciation as of now in the law is restricted to 40%. Earlier it was like a 60% or else 100% it was there. the pollution control equipment it is a 40%, other plant and any plant and machinery which is there 15%. And the important point is a intangible asset. The intangible asset with respect to the intangible asset, the depreciation is 25%. There is another concept which talks about additional depreciation. There is a concept of additional depreciation. The additional depreciation which is given and allowed to the entity which is engaged in the business of manufacturing of an article or a thing or a product or a commodity. They are eligible to get, apart from the plant on the plant and machinery, they are eligible to get additional depreciation. Generally on the plant and machinery, the eligible rate of depreciation is 15%. If the asset is put to use in the relevant previous year, the section 32 subsection 1 clause 2a which talks about additional depreciation, if the entity satisfies the conditions with respect to the additional depreciation, as I said that the entity used the plant and machinery for the purpose of manufacturing of an article or a thing or a commodity or anything, then they are eligible to claim the additional depreciation at the rate of 20%. If that is put to use is less than 180 days in the relevant previous year, then they are eligible to claim 50% on the 20%. The balance 50% they are eligible to claim in the subsequent financial year. Right. The next one is the actual cost of an asset for computing the depreciation. On what is the cost we have to consider for computing the depreciation? We have to take the purchase cost, we have to take the incidental expenses, carriage inward, installation charges, even the trial run expenses. All these things will form part of your actual cost of an asset for computing the depreciation. Actual cost. Suppose from the trial run, if the entity has received any income, that shall be reduced here, and we can show it actual cost of asset. All the expenses and ancillary expenses, all the things will be added. On that, depreciation will be calculated. Right. So mere purchase of asset is not important. In Income Tax Act, the law says that we have to put to use the asset. That is more important. The next one is a asset partly used for the other purpose. Whenever any asset which is used partly for business purpose and partly for other purpose, then the proportionate depreciation based on the number of days usage. Based on the number of days usage, the depreciation will be calculated for a full year. We have to identify what is the number of days the asset is used for the business purpose, what is the number of days used for other purpose. Only the asset which is used for the purpose of business purpose, to the extent of those days only, we are eligible to claim the depreciation on that. Right. There is one more section which talks about investment allowances for investment in new plant and machinery. There is a section 32 AD which talks about there is an investment allowances for investments in new plant and machinery. Okay, that is which talks about the rate of investment allowances will be given as a 15% will be given. That is a call only for the specific states like Telangana, Andhra Pradesh, and Bihar and West Bengal. These are the states. If you make any investment with respect to the new plant and machinery, on that again you are eligible to claim a section 32 AD investment allowances. In the name of investment allowances, you are eligible to claim as expenses in the P&L account. Please make a note, there is a lot of difference between the depreciation and investment allowances. Depreciation means which is charged to the P&L account, as well as which is reduced from the asset, whereas investment allowances is only which is charged to the P&L account only. We are not going to reduce any amount with respect to investment allowances from the asset. So this is the major difference. So the depreciation will be charged to the P&L account with respect to investment allowances also will be charged to the P&L account. Depreciation will be reduced. From fixed asset original cost, whereas investment allowances will not be reduced from the fixed asset cost. So this is the next one is a direction for tea, coffee, rubber business. That is a separate different story. Direction for petroleum and natural gas business. These are the sections very rarely used. I'm not touching now. Now coming to the next point, I would like to address here. expenditure for scientific research. Again, the scientific research, whether it is a in-house research or there is a another category like one is a scientific research, whether in-house you are doing a research. There is a second, there is a for revenue expenditure, there will be 100%, capital expenditure, there is a 150%. Again, for the land, it is a 100%. With respect to the some contributions which are made to outsiders. Okay, suppose the other entity which is engaged with a researcher, there also whatever the contribution you give, that is also you're eligible to claim as a section 35 directions. That is which talks about a scientific research. The scientific research is a vast syllabus, vast topic we have to see independently, and we have to understand what kind of an expenses in case you are incurring in-house. Suppose you are contributing, giving it in the form of a donation to another scientific research institution, then you have to check whether it is giving, whether what kind of an activity that is engaged, whether it is a social science research or scientific research, what kind of a thing. Depends upon the nature of the activity engaged by other entity, you are eligible to claim the deduction under this section. You are eligible to claim as an expenses in the P&L account under section 35. Right. The next one is a section 35 ABB, which talks about expenses for obtaining telecommunication license. Expenses for obtaining telecommunication license. It means, what is the meaning of expenses for obtaining telecommunication license? It is nothing but the amount which is paying to the TRAI, Telecom Regulatory Authority of India. The expenses which are paying to the TRAI. What amount I am eligible to claim as an expenses or a deduction in my P&L account. The law itself is clearly saying that the expenses for obtaining the telecommunication license, whatever the amount you are paying to the telecom TRAI, you are eligible to claim to the extent of like a proportionate amount you are eligible to claim as a proportionate amount with respect to the license period. Suppose I am obtaining a telecom license for the period of 15 years. I am paying a 15 lakhs. Let's say I am paying a 15 lakhs rupees to the TRAI. I am eligible to operate. 15 years of the telecommunication license in the APR Telangana circle. Then the 15 years the license period is there. What I can do, I can amortize the license over a period of 15 years by charging a 1 lakh rupees. 15 lakhs divided by 15 years equals to 1 lakh. By charging 1 lakh into P&L account, I am eligible to amortize the license cost and I am eligible to charge it to the P&L account. That is the amount I am eligible to get as a deduction. Right. In the course of, if in case of anything happens, anything, the telecommunication license, anything, in case I'm transferring, whether I'm transferring full, I'm transferring, whether I'm transferring a partial license, I'm transferring. In case of a full license, I'm transferring means I have to check for the capital gains. At what cost I purchased, at what cost I'm transferring. Again, there is a question will arise. There is the two kinds of income will be arise. Again. One is a business income, second one is a capital gain also will be arranged. Let's say I take an example. I purchased a telecom license for a 15 lakhs for a period of 15 years. I have operated for the 10 years by charging 10 lakhs into my P&L account as an amortization of a telecommunication license expenses. I'm repeating my facts. I purchased the telecommunication license for 15 lakhs. I'm charging continuously 1 lakh rupees per annum for a period of 10 years I completed. Now I am in the 11th year. As of now, my license life is there for the 5 years, and the value is here. The value here is balance life. Balance is a 5. Balance life is a. I can say that this is a balance life is a 5 years and 5 lakhs is a yet to be amortized. Right? Let's say I'm transferring. Let's say I'm transferring this license. This license I'm transferring for what I can say for this one. What extent I can take here for our understanding. Let's say there is a demand for the telecommunication. The balance, the 5 years, we have emerging scenario now. The telecommunication. Let's say the Jio is asking me to transfer the telecommunication license in their name. They are ready to pay me the 20 lakhs rupees. See, the license life is there for 5 years. Balance life is for 5 years. I'm going to amortize only 5 lakhs. But this license I am transferring for the 20 lakhs. Please understand. The 20 lakhs, for 20 lakhs I am transferring. Now the question is, here the two kinds of incomes will arise. One is a business income, second one is a capital gain. To the extent of 15 lakhs, it is a business income. Beyond 15 lakhs, what extent I am getting, that is called as a capital gain. It means my sale consideration is a 20 lakhs. I'm making it into two parts. My license original cost is a 15 lakhs, correct? Original cost is a 15 lakhs. Out of the 15 lakhs, till now I claimed as a depreciation, 10 lakhs I claimed. 10 lakhs I claimed. My cost is still it is a 5 lakhs is there. Now the thing is, what extent I am receiving total 20 lakhs into two parts. One is 15 lakhs, one bucket, 5 lakhs is another bucket. The 15 lakhs, out of the 15 lakhs rupees, 10 lakhs I claimed as a depreciation and enjoyed the benefit. So the 10 lakhs, what extent I charge a depreciation or amortization in my P&L account will be treated as a PGBP, profits and gains from the business or profession. Beyond 15 lakhs, what extent I received? 5 lakhs I received. The 5 lakhs rupees will be called as a capital gain. Capital gain. I received a capital gain. Hello.
You have just gone mute. That is why I just informed.
Right. Thank you. Is it got muted just now only?
Yes.
Then okay. Yeah, friends, let me discuss and explain about the concept of a preliminary expenses. The preliminary expenses, we have a mindset that everyone having a mindset stating that the preliminary expenses are those expenses which are incurred before incorporating of a company. But as per income tax point of view, even preliminary expenses can be incurred even after incorporation of a company. For a running business also, we can claim a preliminary expenses. I can say how it is possible means I am running a business in Telangana, in Hyderabad. I want to start a new business in Maharashtra, Mumbai. What I am doing, I'm doing some kind of an activity here, some trading activity or some manufacturing activity I am doing here. The similar activity I would like to do in Maharashtra, in Mumbai. Before starting my business, I want to conduct some field study, some survey, some feasibility study, some R&D, some marketing, so many things, some kind of analysis I would like to do before starting my project. Before starting my project in Mumbai. Then what I have done, I incurred certain expenditure. In the name of starting in the name of a preliminary expense I incurred for starting of my new project in Mumbai. Now those expenses which are related to the starting up of my new project or this new business, I'm eligible to claim as a deduction. So it means the preliminary expenses are those expenses which are incurred before incorporation of company or after incorporation of company, but for a new project and new commencement of a business for an entity. Whatever the preliminary expenses you have incurred, you are eligible to claim as a 5 equal installments. Again, there are the certain restrictions, certain conditions are there. We have to see very in detail, and the calculation has to be done. Whatever the final outcome is coming, you are eligible to claim as a 5 equal installments. You are eligible to claim as a deduction. The next one is expenses on amalgamation and demerger, which is eligible to given the expenses which is given to one Indian company. That is also given only for with 5 equal installments. Coming to the next point, expenditure on VRS 35 DDA. The section 35 DDA which talks about any payment made by a Indian company in the name of voluntary retirement scheme, in the name of VRS. On payment basis, what extent they paid, the payment amount, 5 equal installments, 5 equal installments, the entity is eligible to claim. 5 equal installments, the entity is eligible to 5 equal installments, the entity is eligible to claim as a deduction. Next one is a deduction on capital expenditure for on specified business. Section 35B, which talks about a specified businesses. A specified businesses are those businesses which are engaged into transfer of a petroleum, construction of a warehouse for a sugar, for agricultural produce. There's a certain list of specified businesses are there. If you are engaged in that activity, you are falling under that activity, you are eligible to claim a deduction under this section 35D. So next I would like to discuss on the section 36, which talks about entity specific deductions. Entity specific deductions we would like to touch upon. The first one is a premium for incidence of stock in trade. The premium for incidence of the stock in trade, if at all you have a stock in trade, if at all you are taking any incidence, any premium which paid on the stock in trade, the premium paid on the incidence is eligible to claim as a expenditure in our P&L account. The next one is a health insurance premium for employees. Any insurance premium taken for the health of the employees, then we are eligible to claim as a expenses in our P&L account. Bonus or commission to employees, section subject to the section 43B. Bonus or commission to employees subject to section 43B. Any answer for the section 43B? What it talks? Any answer? Section 43B. Anyone can give in the answer in the chat box, or will say Q&A section. Bonus or commission to employees subject to the section 43B. What it means? Any bonus or commission which is allowed bonus or commission to employees which are allowed subject to the section 43B. Section 43B which talks about payment basis. In order to claim any expenditure in your P&L account, in order to claim in your income tax return, I mean to say about instead of saying a P&L account, I would like to say a income tax return. In order to claim any expenses, in income tax, with respect to the bonus or commission to employees, such amount must be paid to the employees. Bonus or commission must be paid to the employees. Then only it must be paid. It means the expenses will be allowed. The expenses must be allowed only on the payment basis. Even though you are following the accrual method of accounting system, but the expenses will be allowed based on the payment basis. Based on the payment basis, it will be allowed. The next one, interest on loans. Again, interest on loans again subject to the section 43B. Now the question is, what kind of a loans? Whether a loan which is borrowed from a bank, or a loan borrowed from a financial institution, or a loan taken from a friend, or a loan taken from a relative. What kind of a loan which is talking? First thing is section 36, which tells about interest on loans. That's all. Interest on loans is whether from where you have taken the loan, it is not a matter as of now. Whatever the interest you are paying, whatever the interest you are paying, you are eligible to claim as a section 36 as a deduction. Now coming to the section subject to the section 43B, what it talks, section 43B talks about any interest on the loan, the interest on loans pertaining to the bank or financial institution. Please remember, bank or financial institutions, bank or loan, which is talking about the section 43B strictly mentions about with respect to the interest on a bank, interest on bank loan, or with respect to the interest on a loan from a financial institution. Okay. Now here entry specific deductions, which is talking about one is the premium for insurance of stock in trade, health insurance premium for employees, bonus or commission to employees, interest on a loan. The next one is a discount on zero coupon bond. You know the concept of a zero coupon bond, right? The zero coupon bond, the word itself says a zero. Coupon in the sense rate of interest. Coupon means rate of interest. Okay. Now, coupon means rate of interest. The name itself talks about a zero coupon bond, means the bond which carries a zero rate of interest. The bond itself, it carries a zero rate of interest. Now the question will arise, then why should I buy? Why should I buy when I'm not receiving any interest from the bond? The answer to the question is, the zero coupon bond will be issued or sold by the issuing company at a discounted price. Okay, a discounted price it will be sold. At a discounted price it will be sold. The difference between then at a discounted price, let's say the bond value is 10,000 rupees. Let's say for our understanding, just I'm taking, or else the bond value is 100 rupees. We'll take a very small example. The issuing company is selling for 60 rupees. The issuing company at what price it is selling? 60 rupees. The maturity, the life of the bond is let's say 5 years. Let's say on maturity or at the time of maturity, the issuing company will give full value. That means the full value in the sense 100 rupees, the face value will be given. Now for the investors, what is the advantage here? For the investors who purchased such kind of a bonds, the advantage is the difference between 100 minus 60, the 40 rupees is a advantage that for that amount, full amount will be received at the time of redemption. Again, I am repeating, the bond original face value is 100 rupees, the issuing company is selling for a 40 to 60 rupees, but at redemption, the issuing company will pay 100 rupees to the bond holder. So 100 minus 60, the 40 rupees is a advantage to this buyer, or else a bond holder. Now the question is, we are talking about a buyer point of view, but a seller point of view, or the issuing company point of view. Issuer point of view, that is what it is. It is an expenses. For 100, he is purchasing for 60 rupees, but at the time of redemption, he is giving, or else he is at the time of what I can say, at the time of purchase, at the time of purchase, he is purchasing for the issuing company purchasing for 60 and selling and redemption, the amount paying is 100 rupees. The 40 rupees is a expenses to him. Now the expenses will be how it is, how he can charge, what he has to do from the year 1, from the date of issuing of bonds, he has to check what is the life of the bond. In our example, the life of the bond is 5 years. 40 rupees divided by 5 years, 8 rupees per annum he has to amortize, or else he has to charge in the books of accounts in the name of a discount on 0% bond. I hope you understand. So proportionately it will be allowed based on the life and based on the the discount amount we have to determine. Right. Now coming to the next point, employer's contribution for the benefit of the employees. Employer's contribution for the benefit of the employees. Subject to, again it is talking about subject to section 43B. Employer's contribution for the benefit of the employees. It means what is employer's contribution for the benefit of the employees? The employer's contribution with respect to the benefit to the employees with respect to Provident Fund, a statutory program, SPF, or the recognized Provident Fund. Any employer's contribution for the benefit of the employees subject to section 43B, employer's contribution toward the pension scheme of the employees. See what it is saying in income tax law, employees contribution and employer contribution. Employer contribution for the benefit of the employees, employer contribution towards the pension scheme of the employees. Right, let's see. I'm going to say about, because we are discussing every entity specific directions, we have to discuss about employer's contribution for the benefit of the employees. Employer contribution. Any contribution which is made, which is made by the employer on behalf of the employees, Such expenditure must be deposited. On or before the, with respect again, section 43B. Section 43B which talks about, section 43B talks about the payment basis. Payment basis means the expenses must be, the contribution must be made on or before the filing of the, on or before the due date for the filing of the return of income. So the next one is employer's contribution towards the pension scheme of the employees. The next one is a deduction related to debt or useless elements used in the business. Any debt or useless elements which are used in the business, we are eligible to claim as a deduction under section 36. Coming to the bad debts, please remember the important point with respect to the bad debts. Bad debts are allowed. Bad debts are allowed to every organization or every enterprise. There is provision for bad debts which are not allowed. Please remember, you cannot create a provision, except you cannot claim a provision for bad debts only. Such provision can be created by the banking companies only, not everyone. The next one is expenses on promotion of family planning expenses, which is only for the companies. The next one is promotion of planning from family planning expenses, it is allowed only for companies. A purchase of a sugar can, where the dealer is engaged within the business of a manufacturing of sugar. The purchase of sugar cost will be given as a expenses. Suppose he is a farmer, he is converting the sugar cane into sugar. Then what is the purchase price we should give? The purchase price shall be considered and given based on the fair market value. So this is a very important the concept of a general direction. The general direction which talks about not covered under section 32-36. It means in order to claim any expenses as a direction, in order to claim any expenses under directions, I want to repeat, in order to claim any expenses as a general direction, then it has to satisfy the following, conditions. The first one is The first condition. Such expenses shall not be covered under section 32-36. What it means? Section 30 speaks about rent, rates, repairs, insurance on the building. 31 talks about plant and machinery, repairs and insurance and maintenance of repairs, plant and machinery. 32 talks about depreciation. It means any expenses you incur which should not be fall under section 32-36. First point. The second one is which is not a capital nature. The expenses shall not be a capital nature. It means it will be given only a revenue nature. Next one is not a personal expenses. The expenses which are purely incurred for the purpose of the business purpose, not for your personal purpose. Next one. Expenses to be incurred for the expenses to be incurred for the relevant previous year. Expenses should be incurred for the relevant previous year. So we are discussing the concept of a general election. In order to claim the general election, we have to satisfy the following conditions. General elections we can claim in our business or in our profession. We are eligible to claim the general elections. In order to claim the general election, we have to satisfy the following conditions. The first condition is such expenses shall not be covered under section 32-36. The second one is such expenses shall not be a capital nature. The expenses shall not be a capital nature. It means the expenses should be a revenue nature. Indirectly it is saying it should be a revenue nature and it should be chargeable to P&L account. The next one is such expenses shall not be a personal nature, personal expenses. Personal, it should not be personal expenses, it should be a business expenses. In simply, it is a business expenses. The always law uses the word in a negative manner. We have to understand in a correct way. Expenses should incur for the relevant previous year. The expenditure, whatever the expenses you are claiming under section 37, such expenditures shall be incurred for the relevant previous year, and it should not be related to CSR expenses. It should not be related to your CS, corporate social responsibility related expenses, and it should be related to your business or profession, and it should be legal. It should be in legal nature. Expenses not related to penal. Again, expenses which should not be related to penal or illegal nature, like a bribes, a secret commission, whatever you give, it is not will fall under section 37. Right. Now let's understand. There is an expenses which is related to plant and machinery. Can I treat under section 37 and decline? The answer to the question is no, because in order to claim the section 37, the expenses shall not fall under section 32-36. In case you want to claim the expenses related to plant and machinery, you better go and read the provisions of section 31. There you claim, but not here. It means a general direction is a direction which is a residuary category. What it's, sir? A residuary category which it is talking, right? Now we are entering with a very interesting area. Section 40, clause A, subclause 1, which talks about a payment made to non-resident. What is the section says? The amount specifically not deductible if the payment made to a non-resident when you are failed to deduct the TDS or deducted the TDS but not deposited with the central government. Then entire 100% amount, whatever the amount you pay to the non-resident is fully disallowed. This is the first point. Fully disallowed in the sense when the TDS payment is not made, when the TDS payment is not made, and the expenses which you are going to claim in the expenses which you are going to claim is not at all 100% allowed. 100% the expenses will be disallowed. That is called any payment made to a non-resident. Section 40A 1A, payment made to a resident. Whenever you make a payment to a resident, if the threshold limit crosses, then you are, what I can say, when the payment made to a resident, you are then when the payment is made to a resident and where the threshold limit is exceeded, the threshold limit for the 194C it is 30,000, 194J it is 30,000, where the threshold limit is exceeded are applicable, wherever it is applicable, you have to relate the TDS. Remember, failure to relate the TDS and deposit. One scenario is you fail to direct the TDS. Another scenario may be you directed but not deposited with the TDS amount with the government. Then what I mean to say, in the first scenario, non-resident scenario, it is 100% allowed. In the second scenario, it will be 30%. It will be disallowed is 30% is disallowed. Now the question, what we discussed, the first one is the payment made to a non-resident. We discussed the payment made to a non-resident if the entity failed to direct the TDS or failed to directed but not deposited, then 100% TDS we have to, the 100% expenses will be disallowed. Coming to is payment made to a resident where the TDS is not directed, then 30% will be disallowed. Suppose if the mistake is been rectified in the subsequent financial years, it means the TDS is directed and deposited with the government authorities, then the entity is eligible to claim it means entity is eligible to claim the amount of payment made to a resident and non-resident. Friends, next come to next one. 40A IB, payment made to a non-resident for equalization levy. This is a new concept of equalization levy. Let us understand quickly. You will understand what is the concept of equalization levy. Let's see the concept of equalization levy. We will understand the concept of equalization levy, which is similar to the TDS. I mean to say, which is similar to TDS. Thanks to information technology, the supply and procurement of digital goods and services have been undergone exponential expansion everywhere, including India. The digital economy is growing 10% everywhere. Currently in the digital domain, business may be conducted without regard to the national boundary. See what it is talking. There is a concept of equalization levy. It is purely talking about the technology. Thanks to digital India. Okay. Then what is happening? Then what is happening? Let's see. Let's understand. See, the business in digital domain does not require any physical presence and location. It takes place through the concept of a cyberspace or internet. Person carrying on business in digital domain could be located anywhere in the world. These new business models have created new tax challenges. Right, the digital. We know there is a one we are using apps like PhonePe or Google Pay. Where is the mediator sitting? Where he is standing? We don't have any information also. It means human interface has been totally 100% gone. Okay, we are doing carrying activity, business, so many things we are doing with our mobile phones only. Like that. It means to say about what I mean to say. The digital usage of the digital environment is more Now the thing is, why we come back to our the typical direct tax issues related to e-commerce. We call it e-commerce are one is a nature of payment, establishing a nexus or link between the taxable transaction or activity, taxing jurisdiction, identifying the taxpayer for income tax purposes, lack of physical presence. These are the issues or the challenges which are faced by the challenges which are facing in the e-commerce. Now what happened? Many online advertisement portals like Facebook, Google, Twitter, and are non-resident. Facebook, Google, and Twitter. For example, these are the non-residents, and they do not have any permanent establishment in India. They do not have any permanent establishment in India. Then many residents of the many resident SSs make a payment and claim a deduction of Section 32 and 37 as a business expenditure. See, my friends, what it is happening here? Whatever the expenses which are incurred, whatever the payment they're making, many individuals, whatever the payment they're making to non-resident, like Facebook, Google, Twitter, etc. All of the non-resident, whatever the payments they are making, all are happily claiming an expenses under Section 37 as a business expenses. The government is giving a benefit. But a non-resident, they made a payment to a non-resident. For non-resident, no tax in India. For a non-resident, there is no tax in India. Hence, the government is losing a tax revenue. Two ways. One is the income is not getting taxed. Second one is the people are claiming as expenses. People are claiming as deduction. Then the government has come up with a notification. I'll come up with a new concept which is called as a equalization levy. Let's see once again we'll see about equalization levy concept. Yeah. Now, the concept of equalization levy has been introduced in Chapter 8 of Finance Act 2016. The concept of equalization levy has been introduced, and the provisions are extended to whole of India except the state of Jammu and Kashmir. Like this, they have introduced it. Now, what is he saying? The chargeability of this section, which talks about equalization levy shall be payable at the rate of 6% of the consideration for any specified services received or receivable by a person being a non-resident from. It means anything like any services, any specified services. I am talking about only specified services received or receivable by a person. Okay, right? From a person resident in India and carrying on business or profession, or a non-resident having a permanent establishment in India. Specified services means online advertising, advertisement ads, digital advertising space, any other notified services by the government. See, my friends, in a very simple manner, what we have to understand, the concept of equalization levy, which is similar to the TDS. In simple, any payment which you are making to a non-resident, purely related to specified services. Purely related to specified services. For those transactions, you are supposed to adopt the concept of equalization levy. The concept of equalization levy you have to adopt. By adopting the equalization levy, you have to deduct 6%, and there are certain conditions. The payer must be a resident. And he shall carrying the business or a profession. And such services must be used for the purpose of business or profession, and such kind of specified services are online advertisement, digital advertising space, any other notified services by the any other notified services by the government. So in simple, whenever you are availing a specified services from a non-resident like Google, Twitter, Facebook, etc., you are supposed to deduct the 6% as a equalization levy. Again, the concept of equalization levy shall not be applicable when it is not applicable. If a non-resident has a permanent establishment, we can do this, my friends. Conditions. If non-resident has a permanent establishment in India and the services provided by non-resident are connected with permanent establishment in India, aggregate amount of the consideration does not exceed 1 lakh in relevant previous year. It's okay. You are taking a specified services from a non-resident again for the business purpose, whereas the consideration is not exceeding 1 lakh, then you need not adopt the equalization levy. Specified services are for personal purpose but not for business purpose. In case it is a specified services are for the personal purpose but not for the business purpose, means you need not to invoke equalization levy. So what it is saying, in case of a non-resident who is having a permanent establishment in India, no need to apply the equalization levy. Again, such services for the personal purpose, no need to apply for equalization levy. Again, if such services the consideration is only less than 1 lakh, no need to apply the equalization levy. The rate is 1 lakh, threshold limit is more than 1 lakh. Who shall collect equalization levy in the sense the person who is taking the services from the non-resident, he is a responsible person to apply the equalization levy. The time limit for the deposit in the equalization levy is similar to the TDS on or before the 7th day of the next month. Failure to do the failure to deposit 1% per month or part of the month shall be applicable on the late deposit or of levy under section 165 or 60A. Failure to default of person liable to pay to the government. So this is the concept entirely which talks about equalization levy. Now I am coming back to there is a concept which still a few more things are there, we will discuss. Royalty fee etc. charged by the state government, TDS on salary payable outside India, TDS on non-monetary packages. Now the coming to the important point, 40A2 payment made to a specified person. 40A2. When see the payment made to a specified person, what it is? A specified person here is a relative. Who is a relative? Again, we have to see the definition of a relative. There it will say SSC, he for his spouse, child, parents, brothers and sister, and spouse, brothers and sister. So his parents and her parents, his parents, brothers and sisters, her parents, brothers and sisters, and grandparents, lineal descendants of the both. It will be there is a definition which is given a relative. Now the thing is, now payment made to a specified person relative. Suppose let's say there the two persons are there, both are the brothers. And elder brother is carrying the business of a cement, younger brother is what I can say builder. This elder brother is supplying cement and steel to his younger brother. Younger brother. Now what the law says that you have to check the fair market value of the goods and services, at what price those goods and material is available in the open market. Suppose if the elder brother is supplied for lesser than the fair market value of those goods, then the difference between the fair market value and supplied value, at what price is supplied, the difference amount will be treated as a amount which is not allowed under section 40A2, disallowed. The amount which is disallowed under section 40A2, excess payment, right? It means whatever the goods and services which can be in buyer point of view, I will tell you. In the buyer point of view, I will tell you. He has recognized the statement, say 1 lakh rupees. In the open market value, what it is, he has the open market value. The open market value, it is a, let's say 80,000 rupees. He has excess recognized in the purchases. Excess recognized in order to claim reduce the taxes. The 20,000 rupees can be added in the 40A2. Either vice versa situation, it can be. This is a payment made to a specified person. The next one is a cash payment in excess of rupees 10,000 made in a single day. cash payment in excess of rupees 10,000 made in a single day. Any payment, any cash payment made in rupees of rupees 10,000 made in a single day to a person, then it is full amount is reserved. Hence, it is advisable always make a payment lesser than, if you want to make a payment in the cash, make a payment always less than the 10,000 rupees in a single day. Provision for gratuity, asset acquired from foreign currency or loan, 43 will be expense on payment basis. We will see in detail about expense on the payment basis, which we have a separate section that is called as section 43B. Let's see. Let me give. We will discuss section 43B. Let us take just 1 or 2 minutes break and I will continue. Okay, we will have a 1 minute, 1 or 2 minutes break and I will continue 43B in detail.
छोड़ होंगे एलपीसी में किया है एंड एलपीसी का सेंड द फाइल फॉर अपलोडिंग.
Friends, let us start. See section 43B, which talks about the expenses allowed on payment basis, even though the entity is following a accrual method of accounting. It means there are the certain expenses shall be allowed in your computation, in your income tax, if you make a payment on or before the due date, of filing of the return of income. So section 43B talks about purely payment basis expenses will be allowed. If payment is made on or before the due date, the expenses will be allowed. If the payment is not made on or before the due date, then such expenses will not be allowed for this relevant previous year. Okay. Suppose if the such expenses which are paid after the due date, then those expenses will be given as a deduction in the next financial year in which the expense in which the year in which the expenses are paid. Let's see. Then the total expenses which is related to the payment basis, section 43B, which covers total 7 category of expenses. One is employees related payments. Employees related payments. The first category is employees related payments. There are the 3 things are covered. One is a bonus, commission, leave encashment, salary. One is a bonus and commission, leave encashment, salary. Employer contribution towards yes, statutory provident fund, recognized provident fund, approved gratuity fund, approved superannuation fund, new pension scheme, any other fund as per law. See what it is telling, employee related payments, which is talking about 3 things. One is the bonus and commission, leave encashment, employer contribution towards to provident fund. If the employer, let's say there is a ABC Private Limited, the employer announced that I'm going to pay bonus to all my employees. I'm going to pay Diwali bonus to all my employees. Okay, 1 month salary as a bonus I am going to pay. But he never paid. He announced it but not paid. Now the question is, can he eligible to claim the bonus expenses in his books of accounts? The answer to the question is no. If he makes a payment on or before the due date of filing of return of income, so it is a ABC Private Limited, the due date for the filing of income tax return is for the assessment year 23-24. The due date is assessment year 23-24. The due date is still it is available 31st October 2023. On or before the 31st October 2023, if the ABC Private Limited paid bonus to the employees, then the employer is eligible to claim the expenses in his P&L account or else in his income tax computation. I mean to say about in income tax computation. This is the one point. The same logic for bonus or commission, leave encashment, salary, employer contribution towards the fund. The next one is interest on loan. What kind of interest on loan it is covering? This section 43B covers only interest on loan which is taken from a bank or a financial institution, Suppose you borrowed a loan from a bank or a financial institution where the interest is due. You are supposed to make a payment on or before the due date of the filing of the return of income. Then only you are eligible to claim. Otherwise, you are not eligible to claim. Now the question is, see, if you carefully observe ITR 3, the form ITR 3, if you carefully observe, there will be it will be mentioned in simple. ITR 3 form will be mentioned in simple. The ITR form will be mentioned here. How it is? It will be mentioned, right? If you see the ITR 3 form, you go to the downloads. In this, you go to the ITR 3 notified form. I'm opening the ITR 3 notified form. Okay. If you go to the section 43B, I hope you are able to see. Right. There is a separate segment which talks about any amount disallowed under section 43B in any preceding previous year but available during the previous year. I will come back to this one. Right. Here, look into this 11th point. Any amount debited to the P&L account of the previous year but disallowed under section 43B. Look at this point, my friends. See, I'm enlarging this point. Any amount debited to your P&L account, the profit is derived from the P&L account. If any amount, anything like any sum payable to an employee as a bonus or commission for services rendered. Okay. Now any amount which is debited to the P&L account but disallowed under section 43B. You have to specifically mention. You have to verify the entity whether the entity recognize the bonus expenses in the P&L account, whether the entity is paid the bonus to the employees or not on or before the due date of filing of return of income. Then only is the entity is eligible to claim the deduction. Similar way for the interest on loan, the loan which is taken from a bank or a financial institution only covered, but not any loans which are borrowed from a friends or relatives, it is not covered. Any loan which is taken from a friends or relative, it is not covered. I hope you understand. The next one is any taxes or duty or cess or any fee. Any tax or duty or cess or any fee. It means I can say that a tax you want to claim as an expenses, any tax in, let's say, a custom duty or else any duty you want to claim, any cess or indirect taxes, any indirect taxes which you want to claim in the P&L account as an expenses. Then you have to make a payment on or before the due date of filing of return of income, otherwise you are not eligible to claim. The next one is Indian Railways. Any sum payable to the railways for use of the railway assets. The next one is NBFC. Interest payment to NBFC, which is a deposit by taking NBFC, are systemically important and non-deposit taking back NEC. See the things like employee related 3 activities, bonus or commission, leave encashment salary, employer contribution towards the fund. Next one is interest on a loan from taken from a bank or financial institution. Any tax or duties as any fee is pending. And next one is Indian Railways. Any payment due to the Indian Railways. Any payment due to the NBFC. These are covered under section 43B. Right. Let me move to the concept of a presumptive taxation now. So for a while I will discuss about presumptive taxation. After that I will discuss about some case laws I will discuss. Then I will come to the Q&As of the participant. The presumptive taxation section 44AD. The section 44AD is a presumptive taxation scheme which is given by the income tax department, where you need not to maintain any books of accounts, where a specific percentage of income, shall be, if a specific percentage of the turnover, turnover shall be treated as a income, a presumptive income, and on the income we have to make a payment of the tax. Say section 44AD, which is applicable to all kinds of a business, where the turnover up to, I can say that up to 2 CR, you can adopt to section 44AD presumptive taxation. Up to how much? 2 CR. The presumptive taxation scheme you can adopt. See, remember my friends, where the business turnover is more than 1 CR, the concept of the tax audit will come into the picture. But if you want to adopt section 44AD presumptive taxation, your turnover may be more than 1 crore, but up to 2 crores, you are eligible to claim, you are eligible to apply 44AD. Now, what is the 44AD? What is the presumptive taxation rate? In case of a banking channel, just you offer 6%. Banking channel, how much, my friends? 6%. You offer 6% of the turnover. In case of a other mode, it is a 8%. In case of a other mode, it is a 8%. In case of a banking channel, it is a 6% of the turnover you can offer as a presumptive income. Say example, my turnover is 50 lakhs. I'm sorry, my turnover is 80 lakhs from a business. On that, banking channel is 30 lakhs, other mode is 50 lakhs. Banking channel how much? 30 lakhs. 30 lakhs into 6%. I can say 3,60,000 plus 50 lakhs into other mode into 8%. That is 4 lakhs. 4 lakhs plus 3.6 lakhs. It is called as 7.6 lakhs is my total presumptive income. On the presumptive income, I am eligible to claim as chapter 6 directions. I am eligible to claim. Accordingly, once after claiming of the chapter 6 election, what extent is left of that amount I am eligible to pay, I'm liable to pay the tax to the government. Now 44 ADA. What is a 44 ADA? A 44 ADA which is applicable to other than business, in simple we can call it a professionals can adopt the 44 ADA. An engineer, an architect, a chartered accountant, a cost accountant, a company secretary, a lawyer, doctor, a professional, a list of professionals which are categorized in the act. They're eligible to adopt section 44 ADA. For the 44 ADA, the turnover can be, the professional receipts or the gross receipts can be considered. The concept of section 44 ADA will be applicable where the gross receipts are up to 50 lakhs. More than 50 lakhs, you cannot adopt the 44 ADA. Once it is more than 50 lakhs, sorry, once it is more than 50 lakhs, then tax audit will be applicable. Again, tax audit will be applicable. And what is the presumptive taxation rate under section 44 ADA means the presumptive taxation rate under section 44 ADA, it is a 50%. 50% will be considered as a presumptive income. Presumptive, it will be considered as a presumptive income 50%. Done. 44 AD. Again, one more latest amendment with respect to the 44 AD. I want to address you. The 44 AD can be adopted even up to 10 crores of the business also, subject to there shall be 95% of the receipts and payments must be through online. You cannot exceed if your receipts or payments cannot be more than the 5%, subject to. In case your receipts and payments are less than receipts and payments are, I mean to say, through banking channel, it's more than 95%. Even you can adopt the section 44 AD for a business purpose under presumptive taxation. Right. So 44 AD, which talks about a vehicles, which talks about a heavy vehicle, light vehicle. With respect to the heavy vehicle, there is a, with respect to the heavy vehicle, there will be called, there will be per ton per 1,000 rupees per month will be considered. Per ton per vehicle per month. Suppose I am having a vehicle of a 16 tons capacity, then 16 into 1,000, 16,000 into 12 months. That is my present income, irrespective whether I use or not the asset. Mere ownership is enough to calculate it. Right. Then that is in case of small vehicle, it is 7,500 per month, and particular and per month or part of the month when you own the vehicles. The important here is point here is one has to understand. During the previous year, at any point of time, the total number of vehicles shall not be more than the 10. In case you are more than the 10, you will not come under a presumptive taxation route. You have to come in a regular route. Next one is section 44 AP, which talks about a tax audit. A tax audit is applicable where for a business or a profession, for a business where a turnover is exceeds once a year, you have to conduct a tax audit and certified by chartered accountant. In case of a profession where your gross receipts are more than 50 lakhs, then you have to it has to be conducted for your books of account must be conducted for a tax audit. There are the few case laws I would like to address here, sir. One is few case laws based on what is the object of discussing the case laws here means to understand the importance of the provision. There is a BSES Yamuna Power case. There is a case law. The concept of what it is telling, the BSES Yamuna Power, what is the case law it was telling? Depreciation on a computer accessories. The question here is depreciation on a computer accessories. Okay, depreciation on computer accessories. There is a question, there is the computer accessories. I will take an example for a printer. The question arises between the SSE and assessing officer. SSE treated it as a computer. The printer is treated as a, for the printer also, the SSE applied the tax rate of a computer. Okay, tax rate of a computer they applied. Say example that for the tax rate for a computer is a 40%. Now he applied the similar rate applied for a printer also 40% he applied. But the assessing officer, what he has done, he denied. First thing he denied. Assessing officer contention was that this is not a, it is not a computer, it is a plant and machinery. Then I will allow you 15% as a eligible depreciation. Now the case has been traveled to the court. The case has been traveled to the court. The Honorable The Honorable Court has given a beautiful judgment saying that can the printer work independently? The Honorable High Court judge interpreted in such a manner that whether a printer can be worked independently or can the printer be worked without connecting to the computer. I'm repeating. Can the printer work independently or can the printer work without connecting to the computer? Can the printer be worked? Then the assisting officer said the answer to the question is no. Then the Honorable Judge said that when the printer cannot work, a printer or a scanner cannot work independently or without connecting to a computer, then this is when it is not working, when you cannot work and the ultimate object of the purpose is not served without connecting to the computer. Hence, the Honorable Judge finally said that the applicable, because it is not an independent asset, it is a dependent asset where I can say that where it is not allowed. I mean to say about it is not independently work. It is not independently. It is not working. Then you have to consider the depreciation rate which is applicable for the computers. The same rate only you have to apply or adopt for your printers, scanners, the accessories which are related to the computer. We have to adapt. This is the first point. The second one is Gujarat State Road Transport Corporation. The question arises between the Gujarat State Road Transport Corporation against PF and ESI related payments. There are the PF and ESI which is related to. There are the two contributions will be there. One is the employee contribution. Second one is the employer contribution. Employee contribution and employer contribution will be there. There are the two categories of the contributions will be there. Now the question arises, should 43B will be applicable for both the contribution? Okay. Now the question is employee contribution and employer contribution. Should we follow 43B or if only for the employee contribution 43B or employer contribution for any other due date we have to consider? The Honorable Gujarat High Court beautifully said that with respect to the employee contribution, if you go back to the previous slide, section 43B, which talks about employee related payments, which is nothing but employee related contributions. Okay. Employee related contribution related to PF, ESI, Gujarat State Road Transport Corporation, employee related contributions, section 43B will be applicable. What it means for employee related contribution? The employer, while making a payment of salary, the employer is deducting employee part, and he has to deposit with the government. It is the employee contribution remitted through employer. For that only section 43B will be applicable, whereas with respect to the PF and ESI, employer contribution, respective due dates of the respective acts shall be followed. Say example, for the PF contribution, on or before the 15th of the next month. Then on or before the 15th, the employer contribution must be deposited. You cannot take up both employer and employee contribution with respect to the section 43B due date time means you cannot take it. That is a Honorable Court has given a judgment in Gujarat State Road Transport Corporation. That is a very beautiful and a judgment. The next one is a Orient Ceramics and Industries Limited, which is a Delhi High Court judgment. The question arising between the High Court is the signboards. We see the signboards, right? Signboards means big boards. We see in the junction or else in the very on the roads we see that, right, the signboards with respect to the advertisements. Now the question is the nature of expenses for the signboards, whether it is a revenue nature or as a capital nature. The case travelled through the High Court. The High Court has given interpreted in such a way manner that they have verified, they have observed what is the life of a signboard. Please understand what is the life of a signboard. When they verify the life of a signboard, generally it comes around a less than 1 year, because the signboard which is displayed on the road due to the natural wear and tear, due to the sunlight, due to the wind, due to the rain, whatever it may be, the signboard gets damaged over a period of time. Generally, the life is 9 months to 12 months, the signboard life. Then the Honorable Court said that the nature of expenses, once the life of an asset is less than 1 year, it is a revenue nature. We are looking the board is like a steel board or like a iron board. You cannot judge that is an asset which is life is more than 1 year. You cannot say. The objective in the signboard is, what is the object of the signboard? What is the usage? It is a less than 1 year. Hence it is considered as a revenue expenditure. Capscan Diagnostics Center Private Limited. This is the next case law which talks about a doctor referral fee. There was a case law which is related to Capscan Diagnostics Centers Private Limited. What was the case law? You know, there is a diagnostic center, XYZ Diagnostic Center, or else a Capscan Diagnostic Center. We will take it as like the same example. Capscan Diagnostic Center Private Limited. There was one diagnostic center. What is that in the diagnostic center? In the diagnostic center, they paid certain referral fee to the doctors. What they have done, sir? They paid certain referral fee to the doctors. So many doctors, the doctors are referring to their scanning center, their diagnostic center to the patients, and the Capscan Diagnostic Center is paying a referral fee to the doctors. Now the Capscan Diagnostic Center treated the referral fee as an expenses in their books of accounts. While filing the income tax return, they have treated as an income tax computation. Now the assessing officer is disallowed the expenses. The assessing officer is disallowed. But Capscan Diagnostic Center Private Limited filed an appeal petition in court. In the court they filed a petition. Now the honorable court and the honorable judge verified the facts of the case, and they have checked the provisions of, I can say that they have verified and they have checked the provisions of a Indian Medical Association. The provisions they have verified. They have verified the Indian Medical Association whether these expenses allowed in their rules or provisions. They have said that it is doctor referral fee is not at all allowed. It means a referral is not at all allowed. I mean to say what, not a fee. A referral is not at all allowed. Indian Diagnostics and Indian Medical Association, I can say that Indian Medical Association, in their own laws and regulations, such kind of a doctor referral is illegal. Such kind of is a violation of a code of conduct for like that. When the Honorable High Court taken a view, when a particular thing, a particular transaction is against the code of the conduct, which is a violation with respect to their own provisions, the same logic can be applied. The same cannot be encouraged. Such kind of a referral fees cannot be encouraged, and such kind of things will be discouraged. Hence, such a kind of expenses in the penal account is not at all allowed. Doctor referral fee, which is paid by the Capscan Diagnostic Center Private Limited, whatever it is paid, it is not at all allowed. So, this is a favor to the department and unfavorable to the SSC, the judgment. Next one. HI Forgings Limited. There is a case law which is related to a director's son. the company is incurring expenses towards a director's son who is going to abroad for further studies. Now, for his entire further studies, so give me 1 minute. This one has the higher studies of a director's son in abroad. So, whether such a kind of expenses allowed in the P&L account or not, the question. Before that, what they have director's son, what he has done, you know, he has done some apprentice. He has done it from 6 months to 9 months apprentice in the company, and now he now the apprentice he has done, and he's going to abroad for the further studies. And then the estimating officer disallowed the expenses. Then the case is travelled to the High Court, where the High Court, the Honorable Judge, is interpreted. The director's son, is there any nexus between the director's son and a company? Okay, there is no nexus. The first point is there is no nexus. First point. Second point, whether he is an employee in an organization. In case employee means he can go for the further studies in abroad, he can come back, he can resume back to his works. He can impart training and knowledge and enhance his skills. The skills can be used for the growth of the business or organization. But here there is no nexus between the company and the director's son. He is only apprentice. The apprentice may be a term of 6 months or 1 year. Anyone can come and go during the period of apprentice. They will pay the nominal amount as a stipend like that. They will pay. Hence, there is no nexus between the company and director's son. The studies expenses are disallowed. Which is again against to the favor of the SEC. The next one is a Shanti Bhushan case law. A Shanti Bhushan is a lawyer, basically a lawyer, who has undergone into a heart surgery. He incurred a huge amount as a heart surgery, bypass surgery, I can say. He incurred a huge amount of amount as an expenditure. Now what he is telling, what he is doing is treating, he is charging, he is saying to the, he is charging as a expenses. He is saying he wants to claim saying that the surgery expenses he wants to claim in his P&L account, treating that my heart is my plant and machinery. My heart is my plant and machinery. Without my heart, I cannot never function. Without my heart, I cannot discharge my duties. Without my heart, I cannot perform my lawyer assignment or activities. Then kindly treat it is an expenses to the plant and machinery. Expenses to plant and machinery, kindly give the entire heart surgery expenses of 10 lakhs or 15 lakhs in the P&L account. Expenses to plant and machinery. Then the case has been travelled to the court. The Honorable High Court, the judge interpreted it in such a beautiful manner, saying that, my dear Shanti Bhushan, have you never shown, you are saying it is a plant and machinery and expenses of the plant and machinery, you are asking, have you ever shown your plant and machinery in the balance sheet? And have you determined the value? Have you written any value? And how the value is computed, or else have you fixed any value for your heart? Then the answer to the question is, he never shown a plant and machinery, the heart as a plant and machinery in the balance sheet. We cannot determine the value of the heart. Okay. Then the Honorable High Court judge simply said that when an asset is not in the balance sheet, the corresponding expenses will not be given in the P&L account. I hope you understand. So the heart surgery expenses which are not eligible as a expenses towards the plant and machinery, it cannot be given. That's all. So it is also against the favor of the SSC. The next one is East West Hotels Limited, where the amount received by the SSC under a lease agreement is income from other sources or business income. What happened, you know, East West Hotels Limited, one of is a chain of hotels. What they have done, they have given one of their hotels in a sub-lease or in a lease for a long-term lease for a period of 33 years. Again, if the terms and conditions are good, again after 33 years also that can be renewed. East West Hotels Limited, they have a chain of hotels. One of the hotels they have given for a long-term lease. Mr. X has taken that hotel and he is running the own business. Every year Mr. X is paying it 10 lakhs rupees as a lease charges to the East West Hotels. Let's say 10 lakhs rupees. Now the question is, in the books of East West Hotels Limited, whether the 10 lakhs rupees is a business income or a income from other source. That is the question. Please understand whether this is a business income or a income from other source. That is the question it's traveling. Now, SC was telling that this is my business income. Department saying it is a income from other source. Why? Business income means you can claim some expenditure, so and so, these are the things. But other source means you cannot flat 30%, it will come. You cannot claim. The case has been traveled to the High Court, and the High Court has said that finally the functions of a hotel function is not at all you are carrying. You are not running the hotel. That hotel you have given into another person in the name of Mr. X. Whatever the lease rental is paying, lease agreement, amount received in the form of a lease agreement, that will be fall under business income only. Sorry, that will be fall under income from other source, but not a business income. There is a court is ruled like that. Another case law, CIT versus Geoffrey Manners and Company Limited, whether the expenses incurred by the SSC for promotion of films, slides, advertisement film is capital expenditure or revenue expenditure. Expense incurred by SSC for promotion of a films, slides, advertisement is capital expenditure or revenue expenditure. Always department, see, remember, department always tells any expenditure is a capital expenditure. Always SC tells that no, it is a revenue expenditure, because SC wants more direction, department wants to give only less direction to the extent of a depreciation or the amortization, capital expenditure. Okay, that is a contention. Again, with respect to the income, department always tells that it is a revenue income because it is a P&L account, P&L nature, so that the department will get a more tax. Always SSC tells that it is a capital expenditure because you can revenue income. I mean to say about department says that income is revenue receipt. SSC always tells that it is a capital receipt. Once it is a capital receipt in PSF, it is a capital receipt, then what I can say, it is a balance sheet item, it is not taxable. In case of P&L item, then only it is a taxable. Now, whether the expense incurred by the SSC for promotion of a films, slides, advertisement films is a capital nature, means the Honorable Court has said that the promotion of films, slides, advertisement films is in a revenue nature only because it is an ongoing process. The taking of advertisements, promotion of a film, slides, everything is an ongoing process. It is an ongoing process and it is a continuous process where it is considered as a revenue expenditure only, but not a capital expenditure. So one point I want to tell you, income which refers to income whether it is a cash or kind, it is called as a income, temporary income or permanent income, one-time income or a continuous income, it is an income, notional income is an income, capital receipt or revenue receipt, disputed income, whether it is a legal or illegal, lump sum receipt, pin money or loss, whatever it is, all the incomes are which are covered. Pin money means for boys it is a pocket money, for girls it is a pin money. Right, these are the things which are the things I would like to address. Then last one point I want to tell here, source of income tax law in India, we depend upon the Income Tax Act, Income Tax Rules Act, Income Tax Act 1961, Income Tax Rules 1962, Annual Finance Act, circulars and notification by the CBDT, High Courts and Supreme Court judgment. This is the source of income tax law. So this is my overall presentation with respect to the PGBP. I touched upon the overall view to get the brush up the insights on the concepts, and the provisions. Let me check the Q&A within the available time. What extent I can cover? Let's see. I got one question. If the life of an asset is less than 2.5 years, how to arrive a depreciation rate? See, the question here is life of an asset. First thing you have to decide whether it is a capital expenditure or a revenue expenditure. If it is a capital expenditure, I'm talking about income tax point of view. If it is a capital expenditure, you are eligible to claim as a depreciation. For every asset in depreciation, in Income Tax Act, we have a respective rate. Suppose your asset falls under a plant and machinery. 2.5 years you are telling means it is a more than 1 year, it is a capital asset. Hence, the depreciation rate for a plant and machinery is 15% will be considered. Is additional depreciation under section 32(1)(2) allowable on machinery previously used in India or outside India? See, the point here is additional depreciation. The asset must be new asset. The asset must be purchased. It should not be used in India. Again, the asset must be purchased new, and it should not be used anywhere. Okay, it should not be used anywhere. Yeah, there are some of the other conditions, other sections. There are some conditions where it will be there outside India also. Those things can be used and brought to India. Certain percentage of assets. Those are different sections. But in case of this one, additional depreciation, as from my point of view, it is a asset is a new asset. It cannot be used. If any grant is received from any government for purchase of any fixed asset used for business, then is the same grant is reduced from the purchase cost for capitalization, or cost will be shown at the actual cost? So, a very good question, sir. This one. So any grant which is received, any government grant which is received for purchase of a fixed asset, the grant must be reduced from the actual cost. Say example, I am purchasing for a 1 crore rupees worth of a plant and machinery, where the Telangana government is giving a subsidy, or let's say grant which is giving for a 30 lakhs rupees, is they are giving a grant. Now 1 crore minus 30 lakhs, my actual cost of an asset is 70 lakhs. On the 70 lakhs only I have to charge depreciation. Right, sir. Oh, yo. On the basis of actual payment, correct. 43B, this is the right answer. Each provision for bad debts, tax deductible. So the provision for bad debt, see, bad debts are allowed. Please remember, bad debts are allowed for everyone. The bad debts which are allowed as a business expenditure for every assessee. Whereas for the provision for bad and doubtful debts will be allowed only for the banks. Only for the banks, there is the percentage of there is a 5% or 7.5% based on their loans, agri loans, different categories. There is respective percentages are there. Give some examples of this. Why? I don't know for what. I think majority of the messages related to eco. Yeah, someone asked me one question. Share of a profit from a partnership firm. Share of a profit from a partnership firm. See, please remember, share of a profit from a partnership firm which is exempted. under section 10 subsection 2A. Sale of a profit from a partnership firm, you can disclose in your ITR. See, you are a partner. Once you are a partner means any remuneration or any salary or remuneration, commission, bonus, interest, whatever you receive, it is a income from business or profession. Again, so whatever the income, share of a profit from your partnership firm must be disclosed under the segment of exempt incomes. Under exempt incomes, you have to disclose because the profit is already taxed in the firm hand. Again, it is not a taxable. Can depreciation charge on the card lease, card given to employee as a purchase? Can depreciation be charged on card lease, card given to employee as per credit? Let me tell you, sir. So there is one CBDT circular is there. In case of a lease, depreciation is always claimed by the lessor, whether it is a financial lease or operating lease. Can depreciation be charged on a card lease? See, it is saying there is a CBDT circular which talks about in case of a lease, depreciation is always claimed by the lessor, whether it is a financial lease or a operating lease. This is one point. Coming to the hire purchase, what is saying? In case of a hire purchase, SSE gets the ownership only after payment of the last installment, but he can claim depreciation from beginning, assuming SSE is the owner from the beginning. In case of a lease, owner will claim the depreciation. In case of a hire purchase, the ownership will be transferred at the end, at the last installment, but he can claim the depreciation from the beginning, assuming SSE is a owner from beginning. Depreciation on asset partially allowed by the SSE shall be allowed to him to the extent of each share in the asset. What are the changes in BGB by finance sector? So that is a Finance Act 2023. What are the changes means? That is just a separate one, sir. In a retail shop where sales amount is received through digital payment systems, Bharat Pay, whether Bharat Pay should be categorized under the sundry debtor or banking in tally. Also, cash payment received is paid. Also, cash payment received is paid into Bharat Pay through internet banking. This avoids physically going to bank for deposit. Cash receipts are declared. Cash receipts are declared as cash in ITR and the tax is paid accordingly. Whether there is any problem in this, I will tell you. Manisha, I will tell you UPI. I mean to say UPI or Bharat Pay, whatever it may be, like Google Pay, Phone Pay, whatever it is. All the digital platforms are recognized as electronic payments. I can say that. See, our treated as electronic payments. In case of a presumptive taxation, under section 44 AD, there is the two options will be there. One is banking channel, second one is other mode. Whatever the question you ask, all the payments will be categorically decided. It is come under, in simple, it will come under electronic mode. All are come under electronic mode. You can adopt 6% for these transactions. Balance like a cash, whatever it is, then other mode it will be applicable for 8%. I hope you understand. This is for a 6% you can take for these transactions. it is apparent that neither oh. Yeah, there is a one question which is asking tax audit provisions after withdrawing from the 44AD scheme. Very good question, sir. I will give you one question to you. I will give you an example. Based on this example, you can understand. So look into this scenario. 44AD can be adopted up to 2 CR. Up to 2 CR. Now my turnover is 1.5 CR. What is my turnover, sir? 1.5 CR is my turnover. I have now two options. Either I should go a tax audit, or this is my first year of business. I'm talking about first year of my business. Either I can go for a tax audit, or up to 2 CR I have a 44AD provision. Let's say if I'm adopted, if at all I am adopted 44AD, then next year my turnover is 1.6 crore. Okay. Again, I should go with 44AD only. Or if I come back to tax audit, let's say if I come back to tax audit 1.6, even though I'm eligible to go for a 44AD, but I'm coming back to second year tax audit in order to reduce my profits. The next subsequent 5 years, I should go for a tax audit only. Again, I should not come back. Again, next 5 years, I should go for a tax audit. Again, I should not come back 44AD. Suppose in between my turnover is below 1 CR. In between my turnover is below 1 CR. The next 5 years, in between my turnover is below 1 CR. 1 CR below means my tax audit is not applicable. At that time, whenever the tax audit is not applicable, at that time again I can adopt 44AD. See, in simple, what I mean to say, whenever your applicable tax audit, you are coming on the route of a 44AD. Subsequently, again you cannot come for next 5 years. After that only you can come back. So in simple, what I can say, in the year 1 your turnover is a 1.5 crore. You adopt with anything you can adopt first year. Okay, first year you adopted 44AD, let's say. I will take it like this. In the first year itself you adopted with a tax audit. Even though you are eligible to take a 44AD. Next year your turnover is 1.6 crore. Now, because of last year you adopted 44AD, last year you adopted tax audit. Now you should go with again tax audit only. Or if you come back to 44AD, again, sorry, you cannot come back also. Once the provision for 1 crore to 2 crores is there, when you have eligible to take the 44AD means you take and go with 44AD every year. If at all you have broken, you have made a break with respect to the tax audit and you are adopting 44AD, okay, yeah, okay, you are breaking, then you go with the tax audit only. That is the point. After that I can say this is the scenario you understand. Yeah, in another point I can say that in the first scenario what I said, in the first year or second year you have adopted with a tax audit. Even though you are eligible for a 44 DAD, the next 5 years you have to go with the tax audit only. There is nothing, no more options. Thank you, sir, for your excellent and very informative. Thank you, sir. Yeah. Thank you very much, sir. Thanks for your compliments. I'm happy to see your words. Sorry, sales premium received by a startup at the time of seed funding taxable. See, the thing is here, share premium received by a startup company, you have to see the section 56 to section 56 subsection 2 7B, you have to refer, sir. Any premium in excess of the fair market value that is in the hands of the issuing company, it is a taxable, sir. So better you refer once again section 56 subsection 2 clause 7B. You refer, sir, one, you will get a clarity in that. It is a taxable in the hands of the issuing company. The premium is taxable. Sir, I hope, thank you very much. I hope I have covered the extent of possible questions. Right, sir. Thank you. Thank you very much. Thanks. Thank you all for your patience listening and attending all the way of the session. Thanks a lot. I will inform to the TRD team for take a necessary action with respect to some technical echo sound or technical glitches or anything. I request them to kindly rectify the issue and avoid in the next subsequent webinars. That is I can say, and thanks thank you all once again. Thanks a lot. Jabrata?
Yes.
Yeah, my side is done. Yeah. Thank you everyone. Thanks a lot. Have a nice day.